Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The information shared here is for educational purposes only and is not a recommendation to trade.
Good morning, traders. It is Monday, the 26th of January, 2026. It's 8:07 a.m. Chicago time. The last week of January, also the week where we cleared the deck. This week we have Microsoft, Meta, Tesla, and the Fed decision all hitting on Wednesday. That's a little bit of deck clearing there. It's important not to get chopped up in this week. Also, there's some other factors that we'll talk about here in a minute. But first, this is episode 2737. I did not do any shows last week. It was just an absolutely blasting week. Very, very fast moving. There's just a lot going on, and I'm doing my best to keep up. So the sacrifice ends up being the trader bites. So also the holiday on Monday kind of threw the schedule off. So this is where we are. Let's start really by looking at gold. Gold having taken off above $5,000 per ounce of gold. If you have gold coins tucked away somewhere, you've become a heck of a lot more wealthy. That gold has basically doubled in price in about a year. And, I'm looking at this gold thing. I earn in US dollars. I spend in US dollars. I don't have a lot of exposure to foreign currencies. And I'm looking at this and I'm wondering, is my dollar becoming worthless? Basically, my dollar is able to buy less gold, half as much gold now as it did last year. And digging around the macro research from various people, and what do you guys think? Maybe in the chat, by the way, I hope the sound is nice and crisp, but maybe in the chat you can drop in why you think gold is where it is. In either case, auction-wise, it's in price discovery mode. There's no question about it. We are moving this product up, looking for where sellers might come in. There are no sellers out there. At least firm sellers are non-existent right now, and so it continues higher and higher and higher. So let's look at the auction in gold. Look at this thing. These are full session profiles. Gold is a fundamental product, so it basically trades around the clock. So I removed the RTH constraint that is tied to the old COMEX pit session, which starts at 7:20 and ends at 12:30 Central. And I'm looking at this gold, and really it's free and clear, like all together. It just seems that it's free and clear to keep moving up. There's nothing out here. I don't have good measured move targets. It just blows right through them. There's no attention to measure move targets. And again, it's a fundamental, it's a macro-based product. These are sovereign countries that are, central banks that are getting in here. The main idea, the main explanation for gold being what it is simply this is more than uncertainty. It is political chaos. What this is distrust. For the first time in about 50 years, a complete distrust in the U.S. political system. And so because our policy with this current president, really the last president, and of course the current president was there before that. So the last three administrations just been absolute garbage when it comes to international relations. And so what people are seeing, because the Ukraine war started with the last administration, what we're seeing is the U.S. having an erratic policy on how they deal with sanctions, now tariffs, and basically using the US dollar as a weapon against nations, right? That's what tariffs are doing. The the current president, says that overnight, he says, because he didn't like Carney's comments at Davos, that he's imposing a 100% tariff on Canada, and he's going to impose, and he didn't like Macron's comments. So we're going to wake up this morning and we're going to impose a 200% tariff on France. Remember, tariffs are paid by the consumer, you and me, U.S. companies, U.S. entities, U.S. people, U.S. persons. So if he wakes up and says, we're going to impose a 100% tariff on Canada, 200% tariff on France, what that does is essentially it says, hey, I need to diversify or divest of the dollar because I can't give this administration that much power over my economy. And the place to go in that situation, because where else are you going to go, is to go into gold and to a lesser extent silver, because silver is a lot less liquid and has moved quite a bit. And that's what's happening. So, sanctions and so on, these are real risks that other countries who are dependent on the dollar risk having to their system. So this is the main and I think most believable piece. Clearly, the support is way down here. If you look at the profile, I mean, that's basically where we are. This thing could drop. It got as high as 51.08 this morning, and it could drop to 46.50 on any correction here. Because it's fundamentally driven, it'll have a harder time. This isn't like an SOC or news-based event. Because it's fundamentally driven, these central banks aren't going to make a move to sell just as quickly. So it may take a while, but there's a long, long way down for basically $450 per ounce. $450 per ounce in terms of a correction. For it to reach something that we would consider support, and that support's relatively weak, and you can see it's made up of just 5 sessions. So this thing is really in a runaway, almost parabolic move, and being a metal is a very, very serious thing for us to consider, especially, again, if you're a country that has currency pegged to the dollar, or if you earn in dollars, this is not good news. And yes, it does have something to do with Europe saying that they may dump U.S. stocks, they may dump U.S. treasuries. Again, all the more, that's basically a repetition of what I was saying. All of this is lack of trust in the U.S. dollar. So that's the issue. Remember, if gold is priced in dollars per ounce and you want to get rid of dollars, then the dollar has to move the other way. If I'm taking on more gold, I have to get rid of dollars. I have to send dollars to get gold. So when you have pairs like this, products that are based on U.S. dollars like crude and so on, so crude is likely to continue to hold strength there. If it's priced in U.S. dollars and you're dumping dollars for commodities, the dollar is going to fall. That's just the nature of the beast. Okay, so I just wanted to kind of start with that, just to say, keep an eye on gold. I don't recommend trading it per se. Of course, you can, but it's very volatile. It dropped very quickly and recovered on the durable goods. You can see here, durable goods dropped from 66 to 56 or so, and has come back to the SOC and has regained. So let's look at gold while we're at it. The overnight session had a key LIS zone, which I marked last night, and that LIS is right after it opened in the evening. I saw this and I marked this as an LIS, and you could see here as it opened this morning at 7:20 Central, it poked into the LIS and hasn't taken it. So right now, even though it's made a new high, it's tried to retest and has pulled back, and it remains in this 5065 zone below the 5100. The LIS remains underneath us, and as long as the LIS remains underneath us, structural longs are favored. Structural shorts are not, meaning the sell card is off the table for any structural trades, but for scalps or short-term trades, there's still opportunities going both ways. That changes if we bust through the 50-50 and start to move below, then the game changes. The buy card might get pulled off the table. We go neutral. The sell card gets back on the table, and we start looking at structural shorts as well. So it's struggling here with the full session VWAP. It has tested full session mid and has held the LIS zone. That's gold for you. Let's just step back for a second and take a look at where we are overall. Look at those numbers. The RRAN, which is the relative range, which is the current range in 15-minute brackets, the most recent 15-minute bracket range, compare as a percent of the 20-day average for that same bracket. So at this point, we're running twice the range that we would have in this segment of time versus the last 20 sessions. Does that make sense? So this is what this is showing. So we have volume coming in line. Currently, the S&P is running at 100% of RVOL. We have 178,000 contracts. The overnight inventory is 69% short currently, but we have good range and pretty decent volume, pretty in line volume. So we have more range than we have volume. Relative volume, the Nasdaq's the same, 176. The Russell at 199%, and the Dow at 209%. If you go down the line, you'll see where is the volume really. The volume is in the fundamental products again. We've got all of the currencies, the US dollar index, all running very high volumes and very, very strong RRAN or relative range on the Japanese yen. The Japanese yen has been really moving against the dollar. The Japanese yen contract is a dollar-yen contract. And then additionally, you have commodities running pretty strong. So you have natural gas at 140%. You've got gold at 137%, 147% for RVOL. And silver, of course. But look at silver up 8.2%. 8.2%. Silver crossing the $100 mark. Pretty serious stuff there. And then we have ags also trading somewhat heavy now that the pit session is on its way. So overall, there's just a lot going on here. Let's take a look at the S&P. Well, let's just spend a moment on the composites. These are the composites. These are daily bars, daily charts for the NASDAQ and the S&P. It's RTH only. But, what is this saying? We keep tiptoeing higher on every pullback in the S&P with about an equal top on the upside at 70.20 to 70.25. And we keep bringing that high higher and higher and higher. So right now, we're holding steady right against the point of control, the MC point of control, really the composite point of control. We're holding steady in this area. Very likely chop this morning in terms of what the action is likely to be. Okay? So overall, we're seeing the S&P not coming off of its all-time highs. So that's a vote of confidence there. Money chasing returns. And as I said on Wednesday, we do have Microsoft, Tesla, and Meta coming out. You see the NASDAQ's in the same position. The NASDAQ's holding these higher prices as well, trading right up against its CVPOC, the composite point of control. In the NASDAQ, very strong and holding. They have not found the sellers yet across the ES and NQ. Gold, you're already familiar with, already parabolic. There's a strong imbalance. And then crude is in this, despite the movement back and forth, crude remains in this kind of frustrating range, I think, for most swing traders. It's completely balanced. Look at that profile, just an absolutely gorgeous Gaussian profile, and crude is right on top of its composite point of control currently. So it's stuck here in the 61 or so, 60, 67, 60, 80, 60, 90 point of control. So overall, crude is just imbalanced despite all of this news, possible, Iran conflict, whatever. Crude is just holding steady. Let's look at the ES. The ES this morning identified the LIS last night as this range between 69.24 and 69.33 or so, which is right in the full session VWAP zone. The mid, there's pretty good separation between the mid and VWAP, and there's pretty good separation between the point of control and current price. So overall, despite the fact that this product is somewhat balanced overnight, really kind of a P-shaped profile with a rejection, you could see this buyer protection zone was put in here last week, middle of the week. I think Wednesday, we saw the strong pop on really strong volume. Look at that volume there. Strong pop on strong volume, so I colored that in as a buyer protection zone in case there's a retest. And you could see that this morning we opened, or last night we opened, poked down in there into the 79 and came right out. So I am tilting bullish, although the overall indication this morning is likely chop in the S&P. Remember, 100% RVol. 200% RN in here, so it's likely to be pretty aggressive or pretty violent back and forth. I'm running out of time here. I started late today, but the LIS remains between 69.24 and 69.34. As long as the LIS remains unbreached, then we're looking for structural longs. So we're looking for pullback continuations. We're looking for any type of short squeezes on a pullback or whatever. We're looking for any type of indication that the pullback is weak, so we can get long, looking for a test of Friday's high at 69 or so, or no, 63 or 64. So that's what we're looking at here. Just, I would say for ES, because we're in the mag zone, the magnet zone, let it set up. Let it figure out what it wants to do. Anything between 69.50 and the LIS is likely to be messy. So this is, really maybe draw a box and say don't trade. Put a sign on there that says don't trade or something to avoid getting emotionally involved in what's happening in that zone. I would strongly suggest not participating there. We're opening in Friday's range, so the prior settle at 45.75 has about a 74% historical probability of being tagged. So I'm looking for a pullback here. Overall, the inventory has been negative. It's a mixed bag. We're pushing the overnight high currently, but I am expecting it to pull back in here into the mag zone, chop around, and then from there we have to wait and see which directional conviction it has. Looking at the NASDAQ. The NASDAQ is a tough cookie. The NASDAQ, same idea here. Right, we have this buyer protection zone from last week. I mean, the NASDAQ, the reason I don't cover the NASDAQ all that much is because it is just basically a carbon copy of the ES on most days. So you have this buyer protection zone that was poked, and then you have in here, right in here, you have this LIS zone, and it's also in the same situation, except settlement is above us in the NASDAQ as we jump into the open. We're inside of the prior day's range, and it's trading basically unchanged, currently looking for chop there as well. We're going to have to wait for conviction to come in before we participate in a higher probability trades. Crude, I covered crude a little bit. The LIS is just above crude. Crude, I'm expecting to continue to the downside. I'm expecting crude to come right back in and move back into the 60-20, 60-30 area. It's trading at 60.85. Expecting crude to continue to put in lower highs, lower lows, and to continue this channel to the downside unless news comes out. I know that was a lot to cover. It is 8:28. There are 2 minutes to the cash open for U.S. indices, U.S. stocks. Hopefully you picked something up today from this. Just, exercise caution. There's just a lot of news-based, geopolitical-based information coming out and hitting the stream. Our CT news feed has been very, very busy, and it's just a good idea to just chill and let the market set up properly before you jump in. Okay, that's my recommendation. I'll try to be more consistent doing these trader bites, but it's so hard to control my schedule now with this really rough winter and the kids being sick and the mom being sick and all this stuff. But I'll do my best to be here every morning when I can. Okay, good luck, and I'll talk to you Wednesday. Cheers.